Intel reported quarterly earnings on Thursday that beat Wall Street expectations for revenue and earnings per share. But the company also said the release of its next-generation chips would be delayed by 6 months. Shares of the company fell as much as 18% Friday. The company also gave a weaker-than-expected third-quarter guidance. Watch Intel trade live on Markets Insider. Read more on Business Insider. Shares of Intel plunged as much as 18% Friday to $49.50 per share after the company said that the release of its next-generation chips would be delayed by 6 months. The announcement came during Intel's second-quarter earnings results, released Thursday. The company reported earnings per share and revenue that beat Wall Street's expectations. We are seeing an approximate 6-month shift in our 7-nanometers-based CPU product timing relative to prior expectations, Intel CEO Bob Swan said in a statement. The primary driver is the yield of our 7-nanometers process, which based on recent data, is now trending approximately 12 months behind our internal target. He continued, "We have identified a defect mode in our 7-nanometers process that resulted in yield degradation. We've root-caused the issue and believe there are no fundamental roadblocks, but we have also invested in contingency plans to hedge against further schedule uncertainty." Read more. Jason Tauber is crushing the market this year by finding the tech companies enabling the biggest disruptions. He told us how he's adjusting his game plan as valuations soar, and 7 of his top picks today. Intel had previously said that its 7-nanometer chips would launch in 2021. In addition to the delay in releasing the 7-nanometer chips, Intel offered a weaker-than-expected guidance for its third-quarter earnings results. The company foresees adjusted earnings per share of $1.10 on $18.2 billion in revenue, where analysts had expected slightly higher EPS. Shares of rival chipmaker Advanced Micro Devices climbed as much as 12% Friday on the news. Intel had risen 1% year-to-date through Thursday's close. Read more. Bernstein says buy these 13 dividend-rich stocks built to capitalize on a trend not seen in 65 years. Markets Insider.